Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Friday. In today's program, I want to discuss the US dollar and its total domination over the majors and why that has happened. Plus a couple other things as well. But before we get into all of that, don't forget these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. Now, from the beginning of the week, I've been saying, or I've been talking about how the markets might wake up to reality that despite the better than expected or lower than expected CPI result we got last week, that the Fed will not give in on their total commitment to bringing down inflation to their target of 2%. And it looks now that the currency market has actually woken up to that reality. And it's been helped in many ways by the Fed themselves. Don't forget, last week, I also did a video where I said, don't take on the Fed. And the market is doubly taken on the Fed, and the Fed has reminded them not to do that. So basically what has happened over the last, during the US session and certainly in the European session, we have seen the dollar skyrocket to a 1-month high against the majors, against the euro, the sterling, the Japanese yen, etc. And the main reason for this is, like I said, the market's finally waking up to the reality, helped by the fact that several Fed members have spoken up about that commitment to getting inflation down to 2%. Now, they have really literally gathered in the skies, and there's a couple of them. I will read out what they have said in the last, say, 24 hours. First of all, Fed member Kashikari has said, we're getting some help on inflation from the supply side. In other words, thanks to the likes of the commodity prices dropping in price, like oil, is helping them out a little bit. But like I've mentioned several times before, it's only the year-on-year rate which dropped, not the core inflation rate, which stayed the same as the previous reading. So it's only year-on-year. So that is right. That's helped by energy prices falling. But that's just that. It's just that at the moment. Fed's Bullitt, who is a very hawkish individual, he favors a 75 basic point rate hike in September. Don't forget, the market has been toying with whether or not they'll do 50 or 75. He is committed for doing a 75 rate hike in September. He also went on to say, and I quote, I don't see why you want to drag out interest rate increases into next year. So don't forget, he wants to get interest rates to 3.75 to 4% by the year's out. Now, the market has been hoping from that better inflation reading and from the fairly mixed minutes, which we talked about the other day, that the Fed may sort of slow down, which they have said they may slow down the pace, but may stop and, may not keep increasing interest rates so aggressively all the time. He's saying, basically underlining, I don't see why you want to drag out interest rate increases into next year. So he's committed to carrying on doing interest rate hikes this year. He also goes to say he isn't ready to say inflation surge has peaked, and he believes it would take at least 18 months to reach 2% target. So he's, like I say, he's not saying that inflation is falling. He does still believe we could see higher inflation. So that's him. Fed's George, who's a little bit more dovish than Bullitt, she has said inflation numbers last month is encouraging, but not a time for a victory lap. So basically saying it is not over. She also went on to say her colleagues will not stop tightening their tightening policy until they are completely convinced that inflation is coming down. So though she's dovish, or slightly more dovish, certainly more dovish than Bullitt, she is still saying they are committed to the cause. And finally, Fed's Daily, okay, who can be more dovish, but has turned a bit hawkish recently. She says, like I've said already, core services inflation is still rising. So like I say, fact of the matter is, Sorry, my throat's dry. Fact of the matter is, though the CPI reading last week, year on year, was lower than expected, 8.5% versus the 8.7% expected, and is down from 9.1. The core CPI, what doesn't take into account fuel prices and food, was the same. It was still 5.9%. It's not coming down yet. So that's the thing. So this is the thing. So what's happened because of all these comments after the Fed basically reminding the market, don't challenge them? Well, in other words, we've had total US dollar dominance on the majors. In fact, the dollar yen is currently trading around levels not seen since 28th of July. 28th of July. So let's have a quick look at the market and see what's happening with the majors. Now, this is the euro. This is the euro, okay? It is actually crashed quite dramatically. It's currently trading at 1.00869, okay? It's testing this key level, 1.00716. If you look on it on a daily, you can see a bigger picture on this, okay? You know, this is where we left off in the program yesterday. It was trading around this level here. Since these statements and since the market's woken up to the reality, it's come under humongous pressure. This has really actually given a lot of inspiration or encouragement to euro bears to maybe the euro could get to parity again. I personally think in the medium to long term, we will see parity again on this currency pair. But yeah, euro totally under pressure. If we look at the cable, again, remember yesterday, the cable was trading above this key level of 1.20034. It's now since broken through that, and it's currently trading at 1.1896. So again, total domination by the greenback. Let's look at the dollar yen. Like I said, yesterday, a couple of days ago, the yen was fighting back, but not anymore. Currently trading at 136.71, where we left off. Yesterday, it was around about 135, but okay, it's above that key level, which it dropped down to on optimism from the Fed minutes, etc., and things like that, of 133.36. If we look at gold again, total domination by the US dollar, currently trading at 1,752, close to that key level now, not too far away from that key area of interest, that potential support of $1,727. Bitcoin has also come under pressure because, of course, it's risk-off appetite because of this. So we're currently seeing it trade around $21,772. I mean, look at this drop. This is on a 30-minute. This, again, risk appetite off the table because of this. Like I say, the markets are finally waking up to the reality we've been talking about all week. In other news, despite we just saw how the sterling's doing against the dollar, we did have some good news for the UK, but that's not doing anything for the pair. And that was UK retail sales month on month was announced in 0.3% better than the it was negative 0.2% expected. So it did come in better. But like I say, is not helping this pair at the moment. Because I say the reality is we have dollar strength, rush to safe havens. The Fed's not going to give up with their complete commitment to get 2% target reached. The only other major event to happen today is Canadian retail sales due at 12:30 today. How European equities currently trading at the moment? We have the FTSE slightly negative, 0.15%. DAX currently trading at 0.37% negative, and Euro Stock 50 currently trading in negative 0.24%. So there we go. Like I say, we've been talking about this. We started seeing the dollar coming back on Friday. Last Friday, and we've been talking about how long it would take for the market to wake up. And all it took was the Fed to remind them that they are committed to the cause. So there we go. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like. Or share with me your opinion on what you think is going on in the market. Do you think, like I say, the markets have woken up? Like I say, we've been talking about it all week. And like I say, just taking a few statements, a few comments by some Fed members to, remind the market, don't take on the Fed. So, yeah, or just simply say hello, if you like. Okay, not a problem. If you think of a question later, Okay, put it in the comments below, either on YouTube or Facebook. I will see them and I will reply to them next time I'm online. And don't forget, I'm back on again today at 2 p.m. UTC, and let's see if this US dollar dominance continues. Okie dokie. If there is no questions, not a problem. Don't forget, if you're watching me on Facebook, and hey, I've got a hey. Well, that's nice. Hey to you too. Hope you're well and having a great day. Good to see you. If there is no further questions or further, comments, don't forget, if you're watching me on Facebook and you enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and you've put up with me, my over-the-top enthusiasm for the markets, which I just can't help because I love the markets, give me one of those. And you see I've got a couple of likes and some love hearts already, which is lovely. I really appreciate that. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.